Yo, hang on. I got to get some coffee. All right, sorry for being tardy. Sorry for being tardy or retardy. Bum, 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 bum. All right, hey, good morning. It is 8 a.m. in New York City. That means it's time to get together as a community of 18,000 foreign exchange traders, align our satellites, synchronize our watches. I apologize for being a couple of minutes late. It's a real bad thing, but I only got three. I went to bed at 4 a.m. So what time is it? So I got up. Yeah, so I got 3 hours sleep. So anyways, I'm a little behind. So I don't know, sob story. You know, love me. Let's go. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So yes, ni hao ma, jumbo to you. Ask questions, get involved, click the like button, leave comments, and show appreciation to Traders Way. Pretty simple, tradersway.com. Bottom right-hand corner, there's a demo account. Fill out the form. Boom, you're in the back office. Now you can download MT4, MT5, CTrader. There's different choices. You can have an ECN account. You can have a fixed spread account. You can have a variable spread account. I like the VAR. That's how I go. I roll that way. And then what? Fast execution speed, low spreads, big swaps, world-class customer service, and a broker who cares. Okay, I don't know if brokers can care, but I can tell you you're a more profitable client to them if you can trade for years and years and years and years successfully. You'll trade more often, you'll trade bigger lot sizes because you've grown your account. That is a million times better client than someone that just pops money in and blows it up. So therefore, they want you to succeed because it's better for you and it's better for them. Thank you, Traders Bay. Okay. Sangam wants to know if you can join the group without taking the training. Then no, we don't want you in the group if you haven't taken the training. Yeah. Yeah, it's not a training group. That's what the videos are for. All right. So anyways, yeah, so go ahead and do that, Sangam. You'll like it. It'll be fine. It won't be too bad. All right. So I guess this is where we left off. Remember that beast trade? Yeah. Yeah, we said that we had to see through current. Man, hang on. I've got to get this coffee going. I'm dying. Give me a coffee. I need coffee. Papa, just give me some coffee. Hang on. All right, this is a real mess up. And I got white pants on too. You know it's going to be a bad day if you're wearing white pants. All right. Okay. So, yeah, Sangam. Yeah, we'll wait for you, Sangam. Yeah, we'll wait for you. All right. One of the things we talked about yesterday, I think it was Morena that made the comment of like, man, these markets are sideways, all right? They've been difficult because they've been sideways. And I said, absolutely, totally agree with you. Except, point of view, if you expect the consolidation before it happens, because you'll still get in at support, you're more likely to get out at resistance. You expect the pullback, and you see through it through a bias where it might be consolidating, but you figured it was going to consolidate, and you're still going to set up trades as if it no longer will consolidate, which is strange, right? Oh, is that right, Marky? I'll take a look at that. So anyways, 24 hours later, holy shamoly, hey? Yeah, Morena's like, yeah, it was true, and it happened. That's weird, right? That's weird, right? Strange, right? By the way, I don't know if... Oh, my gourd. So, man, my system's supposed to reboot itself, and apparently it didn't, or that didn't do it. I don't know. I'm sorry. Now I got slow internet. Right? Let's see if it catches up. Yeah, I guess we're still... No data. Stream will end shortly, but I'm streaming. Excellent connection. Wow. Bradley asks a decent question. What's the average pip spread on Trader's Way? Well, it would be competitive, but honestly, if you're setting up trades, let's say, for example, that are worth 100 pips, 200 pips, 300 pips, whether your spread is 2.3 pips or 3.2 pips, honestly, at the end of the day, is irrelevant. I'm not trying to like candy coat over the question, but ultimately, Trader's Way is not expensive. They don't slip you, which is probably what happens to those that go with cheap brokers. But I don't think Trader's Way is cheap, but I don't think it's expensive either. So it's sort of irrelevant. That's a cost, right? I mean, the cost of paint to a painter is a real cost, but ultimately paint more houses. But are you guys, I'm getting all kinds of weird YouTube errors and stuff. Are you guys still around? Oh, Bradley's asking because I've seen a few brokers now with 28 pip spreads and no, whatever. And of course, Bradley, you might be looking at rollover and stuff like that, right? So I don't know what you're looking at. I don't know what pair you're looking at. I don't know the time of day. But in my personal experience, Trader's Way is just as it should be. Good. Like, I don't see problems like that, right? Like, I don't know. But I know what you're saying. Here's my word of advice. Never pick the cheapest broker because they might advertise that they give you 1 pip spread on the euro dollar or something like that. But they're most likely also slipping you, which means that you let's say 3/4 of a pip in, 3/4 of a pip out. Now you're paying 2.5, and that might not be competitive anymore. Or why would you want to have an execution partner that has a business model of bait and switching all their or hiding fees from clients? Like I don't know why you'd want a business partner like that. And there was a time when FXCM was forced by the government to send an email to their clients that said they'll slip for their clients, not just against their clients, and that they had to do that because that was actually programmed into their algorithm. And the CFTC and the NFA, as I understood that situation, had a problem. They took issue with the idea that slipping was built into the algo. Like, it was designed to do that so they can make money. And the NFA didn't like that. So be careful. Okay? I don't want cheap. I want quality. Yeah, well, the time of that, Bradley, would be the issue, I think. Now, so you're trading a low liquidity. I mean, it shouldn't be that low, but it's not a common thing to be trading Aussie CAD. I don't know why you'd want to, but even so, if you did it at rollover on sort of a less liquid pair, I mean, like, for example, it's not like Australia is trading wheat with Canada. Well, Canada has its own wheat, or gold. Well, Canada has its own gold, or iron ore, or coal, or whatever. Canada probably doesn't trade that often, right? Canada doesn't likely trade very often with Australia, so I'm not sure why you'd want to trade that pair. But if you traded that pair and it was rollover, that would probably explain it. But even then, 24 pips sounds like too much. Yeah. Well, you might have done an ECN, Bradley. That's what an ECN is. You pay hard dollars instead of soft dollars. All right. So hang on. Let's get on with it. All right, cool. Okay. Yeah, well, ECNs don't have spreads, Bradley. They charge fees. Is that right, FT9? Melbourne's locked down again? Crazy, huh? Yeah, Cave is like, yeah, would you want a $13? Yeah. Yeah, another week, huh? Gee whiz. Yeah. What's up, Danny boy? Yeah, what do you think, Nuno? Okay, I'm looking at this, and it looks like status quo, nothing really to report. Silver's coming down, but let's just move over to gold, okay? Gold was tickling, not quite 29, 28 and change, and now we're at this sort of, the assumed price for gold, let's say a month ago. And Morena's like, Japan also in lockdown. Yeah, just in time for the Olympics. Did you guys see that the Americans have banned American travel to Japan? Okay. Oh, I'm sorry. Thank you. Yeah, did I say gold? I was thinking silver. I mean, I know. Right. I know somebody, by the way, that cashed out of some money on silver right there, which was good for them. Sorry. Hang on. I said one thing and did another. Now I clicked the wrong button. Sorry. I haven't slept much. All right. So let's go back into here. There's the projected high. Let me ask you something. In your humble opinion, in your personal experience as a trader, do gold traders use pivot points? What would you say to somebody starting off? Yeah. It's a good question, isn't it? Yeah. Hmm. Boom, 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 boom. Boom, 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 boom. Boom, 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 boom. Boom, 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 boom. Yeah. So anyways, got to keep your eyes on the prize. Okay. Okay. So a moving average might suggest an opportunity to buy if you're a bull. At least the opportunity to look for a technical reason, right? We have a role reversal, which is a price action, and that says maybe get ready to buy if you're already a bull. And then we have the next period pivot points that are saying we are in an area in which we could consider buying. So if you were a bull, today will be very interesting towards the outcome of what you do all next month. Okay? And keep in mind that one of the things that we're looking for, aka our alpha, our assumptions, right? Our research shows that if the markets do suddenly warm up again, which we expect, that they'll move hot and fast. Okay? Seasonality, I don't know. I don't remember which course I go into seasonality. Does anybody else remember? I honestly don't remember. Boom, 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 boom. Boom, 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 boom. Maybe double top on gold? Well, you would have to be bearish on gold for that. And we're not in a situation to be bearish yet. I thought I did, Jim. I thought right. I had you print, right? I had you print a seasonality chart. No? Oh, well, what a great session that was. All right. Boo, 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 boo. Okay. Okay. So once again, now if you are bullish, okay, think of it for this way. If you're bullish, you're looking sort of like this. Now, if you're bearish, okay, you had this, here you're stop hunting. Okay, that's stop hunting. If you trade that, it's a form of scalping, which is fine. So you can hunt stops. But at some point, you shouldn't be selling here, even if you're a bear. You get that point? So maybe you have here or here in the future. But you would need dollar strength. Okay? And I'm not sure what you have going on fundamentally for that. Maybe it's short term. Maybe your short selling of gold is just something you do for a couple of days. Oh, well, okay, for sure, fine. Uh-oh, I feel like sneezing. So yesterday I got 5 hours sleep, and the last night I only got 3 hours sleep. Uh-oh. I better get some sleep. I don't want to get sick. Okay. So it comes down to really, I'm not sure why you'd want to be buying dollar in the medium to long term. Right? So, and I don't think you would sell here. You could try it. I don't think it's a good idea. But the breach of the psych level, using the psych level now as the role reversal, yeah, but see, like that's like a day trade, and yeah, yeah, I mean you could. I don't know. I'd want a little more meat on the bone. I would look at this, like translate everything. You could sell here, but what do you expect out of this? What do you expect? $25? Dude, why wouldn't you just look at it from this point of view and buy the trend and say, well, right? You expect $250. Like, why wouldn't you just buy the trend? That's the point. A lot of people are always counter trending. It's a stigma of the human condition, I think. I don't know. But why wouldn't you just for example, like a trade like that, why wouldn't you just do that? Or here's a front run, right? Right? Here's the first 4 hours of the month of May, and we're essentially at the psych level. I mean, the central pivot. Like what I teach you guys is say, you only have to be here. And the rest of your month is done. Like literally, you could just be there. And somewhere on this train, you enter. So I don't understand someone that would sell this for a day or two when you just have this these giant moves. Why wouldn't you just buy that, right? Right? Why wouldn't you just buy that? And that's a classic, boring, every kind of day swing trade. There's nothing to that. It's quite straightforward. You don't have to be here. You could be in here or here, because we have all these other things going on. That's just so much easier than what most other people do. And then, of course, because what they're doing is, I don't know, let's say it can be counterproductive is all I'm saying. So, you sort of have a plan A or plan B off the future 55, right? So I would consider like this is a buy zone, and then I would drop into smaller time frames, and I'd use technical analysis to confirm price zones I'm interested in and timing for entering, right? Why do you see a meme board loading? Oh, up there. That's interesting. Yeah, I'm not sure why that's doing that. Let's see. I don't think I can. Yeah. Do 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 do. Yeah, not sure why it's doing that. Well, HH, do they work this well on pivot on stock markets? Well, just remember they're not doing anything except calculations. So the true answer to your question is they work perfectly well in the stock market because they're perfect. They're algorithms. They will draw the math 100% every time. But your question is, do other traders, and well, that would be for you to decide. Okay. So I'm not going to qualify or disqualify pivot points. Just, I don't know. That's a good question. Go figure it out. All right. Let's just take a look and see what is going on. Okay. Dollar, Okay. Here's the perfect match. Bum, bum. Okay. Here's these. Remember, I was drawing that to show you once these start to fail, you might be technically bullish, right? If it looks like a bull and smells like a bull, it might be a bull. So at some point you decide, right? And of course now it's done really well for itself. Swissy's super weak. Yen is super weak. Yeah, the dollar's the odd one out. Aussie, Kiwi doing better. Okay. Euro, again, just counter dollar. Dollar strong, so euro's weak. But when dollar's weak, euro's strong. But have you guys been paying attention to European economic data? It's doing pretty decent, huh? It's doing okay. Europe is trying again, but I suppose if there's further lockdowns, that's not going to be good. Yeah. Yeah, like France is doing better, but I'm much more interested in how Germany's doing than France, only because Germany is one of the largest exporting economies in the world. Okay. So to me, that's sort of, it's just the 800-pound gorilla. Um, you know, when you look at Volkswagen and Audi and Porsche and BMW, there's a lot of cars coming out of Germany. So, so to me, that's sort of the bellwether. It's not one economy over another or one culture over another. It's just, what do I look at to make a decision on import and export data as a sign of, a scorecard of the European economy? Yeah, okay, that might work. Okay. All with loud pipes. Well, I'm surprised how quiet my GTS is, actually. I was going to straight pipe it, but I talked to a custom exhaust firm, and he's like, no. He's like, these Porsches, the exhaust system is so advanced. He's like, I can't just straight pipe the thing. I can't put on a bypass. He's like, I basically have to take the whole exhaust off and custom make something. And I'm like, wait, whoa, what? No, I don't want to do that. HK says, could you say hypothetically if a ban on crypto will have an effect on? No, because, I mean, look, if you're going to pay for your crypto with currency first, okay, sure. But remember, we're tracking the flow of money across borders. Okay? So the most important thing for a foreign exchange trader to understand isn't the psychology of a trader. It's not the psychology of someone jumping in, popping some trades on every day, which we do. And think about it that way, like all of Forex is like, well, how we look at Forex. And it's not true. We are not even a crumb. We're not even a drop in the ocean. What we should be looking at is how do you say? Business deals and business activity on a global scale. That's really what we're tracking here. Okay. So if crypto got, banned by the government, how will that impact Forex? Probably not. I mean, that's that, right? Okay. Right? And I don't think Americans can trade XRP, so like it's been banned, right? Yeah, but HK, it's more like, have Americans stop buying new shoes? That kind of question. For example, let's take that further. Loan demand in America is down and savings is high. So what happens? Okay. What's happening here? And you have to break this apart. Why is loan demand low? Okay. What do most people do with loans? Well, they buy cars, they buy houses. Okay, great. One is not an investment, one is an investment. So one is C, one is I. So why are we in a situation like that? Is it because people don't have a job or don't feel comfortable? That could be it. Are they working at home so they don't need a car? Okay, fine. Have people stopped the migration out of cities into suburbs? Maybe. Are there just more people that just are lifelong renters? Maybe. On the other side of the equation is deposits, as I've covered many, 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 many times. Bank deposits right now in the United States are quite high, more than we'd expect. And what we found is, by and large, Americans didn't spend the money the government gave them, which is a clear sign that most people didn't need the money. And we still have that money sitting around. So going back to HK's question, what matters? Like, what are we, if banning of crypto, if that happened, does it matter to us? Well, way, 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 way bigger and more important of a question is, of the money sitting around in these bank accounts, when are they going to spend them? When are they going to spend the money? When? Okay? That is going to be what influences the market. That's going to be very big. Okay. Okay. And when that happens, we're going to look at things like wage growth. That's what we're going to look at. We're going to consider things like, when will Americans rush to the restaurants? Okay. See, in Canada, you can't go to a restaurant. In America, dude, I eat at a restaurant all the time. Well, I don't actually, but I know people that do. By I mean not me. Right? Right? because this is going to dictate the flow of money. You know, are Americans going to spend money on Amazon again, or is that over? When are people going to travel again? You know, that's going to impact the flow of money. But Litecoin gets banned tomorrow. How would that change the flow of money? Right? Right. Anthony's right. They're not banning and stuff like that. Well, one of the things I'm studying at MIT is public policy and regulatory compliance, in particular around an ICO, which is interesting, isn't it? And a lot of people call it crowdfunding. I would kind of disagree with that. So I have some ideas how that market should mature. Okay. Because you want some regulation, you want some for example, if you're going to invest into an IPO, what do we know about the company? First of all, you can find out who is actually the founders and senior executives at the firm, right? You actually know who they are. And if they conduct fraud, there's some recourse you can take. You can hunt them down and kill them. You can sue them. You can do something. But they're like real people that exist, right? And you can see that. An IPO generally is for a company that already has revenue and several years of revenue. They might not have profits, but they have revenue. They have real customers, right? They have a real product and service, therefore, that has gone through a couple of life cycles, most likely. Right? And because the cost of getting the company to that level, it's already received a vetting process of sophisticated institutional investors like venture capitalists plowing money into it. And by doing so, reviewed the management team, the financials, have met the customers, and basically taken this company through a vetting process. So professionals have vetted the company, created the product and service, expanded the company, right? Created revenues over a period of time. And then what does an IPO use the money for? Well, generally, it's not to build a company. It's not to build a product. It's not to build a service. That was done years earlier. You go IPO to raise millions of dollars to scale globally. Right? You understand? They're like, this works. We build something, people love it, they're using it, there's a real use case, everything's been proven and vetted, and now we got to go global, baby. We got to, right? This is more than America. This is global. We're going to have millions and millions and millions of accounts, right? Like, for example, Coinbase went IPO recently. They had 20 million accounts, more than most of the biggest brokers in the United States. They were huge, right? ICOs. You don't get ownership. You don't get equity. You might not who's behind. There's no prospectus like there is in an IPO. So there's no transparency. You don't know who's involved, right? Which is part of the transparency issue. You invest money, but you don't get equity. You don't get a return. What kind of due diligence do you do? Well, you probably can't do any due diligence except they write a white paper which says their thing is going to change the world. So basically, it's a business plan scratched on the back of a cocktail napkin, and they're asking you to throw money at it, and, right? You don't get anything in return. And what is the point of the ICO? Because they might actually build maybe a product or a service or something. Well, so you're like a speculative founder that might actually build something. You don't know if you're good at it. You might build a bunch of crap and all this kind of stuff. Like, It's just weird. So could we improve on that model? Oh, yeah. Yes, you could improve on that model. Okay. Okay. So, yeah. 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 We can improve on that for sure. Okay. All right. Looking at our kitty cat, looking at our rotation here. Okay. Want to keep it short and sweet. Okay. So this will probably be setting up for next month. You know, here's like, yeah, white papers have very little. Yeah. Yeah. Just think of it like it's a business idea scribbled down on a cocktail napkin. Okay. Okay. Anyways. Okay. All right. So euro dollar sitting in our plan B. If you recall, this is yesterday's plan B. Okay. If you recall. And so now I have to wait or walk. Okay. So that's kind of like the theme for today and tomorrow. Euro dollar needs to go up. Pound dollar needs to go up. USD CAD needs to go down. Once again, we've just done the same old range. Okay. So I'm hiding in the bushes waiting. Okay. 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 So the question is, do you believe this is going to make a higher high? I asked you yesterday, is this going to 90? Anthony's talking about the game. Well, people would be vaccinated, right? Okay. In America, you're not even required to wear a mask in a restaurant. You don't have to. It's not even required, right? Sangam, how do you get into the war room? 1, you join FX Bootcamp. Cost, what, 382, 386, 390? I don't know. It's less than $400, whatever the number is. Okay, that's a one-time fee. Oh my God! I mean, you got this, right? Okay, great. The second thing is it says, hey, thanks for joining FX Bootcamp. You got over 50 hours of training videos. You're going to learn things like day trading and scalping and price action and fundamental analysis and day trading and swing trading and so much more. Over 50 hours of educational content. By the way, if you want to join the live group and learn how to apply these techniques in a live group setting, it's $99 a month. Would you like to join? That's it. There's no more. That's it. There's no more upsells or downsells. That's that. Sangam says, yeah, in India, everything's locked down. Yeah. Well, people are sick. Okay. People are strange. Okay. So, again, I asked the question yesterday. At some point, you should probably have an answer. Is this going to 90? That's the first thing you have to answer. And if your answer yes, you will behave differently from somebody that says no. So let's say the answer is yes, because what I'm looking at is technically this market is bullish. Okay? Yes, I'd feel more comfortable if the angle and separation between the 2155 diverges, right? Well, I'll see that by MACD heading up. I'm looking at MACD only right now, okay? When I see this, MACD is above the waterline. Therefore, I know the 21 is above the 55 because that's what it means. The second thing is right now, the 21 and 55 are converging. So if I was a technical trader looking to enter, I'm still only looking to buy, but I'd prefer if this started, if we got a nice cross up. And then I would buy, then I would look at the candles and buy dips. But this sets up the attitude right now. Okay? The attitude is there's some support. There's a breakout with roll reversal. Okay? And you should be game on, dude. I don't know. Okay? But like I said yesterday, in fact, and even just now, if you don't have an opinion on where we're going, if you don't know at 84 if we're going to 90 or not, okay? See, if you believe we're going to 90, this is not a problem, okay? Oh, it's range bound. So you buy on the bottom or you buy the breakout, right? The clarity of your strategies are so easy or clear. I mean, the clarity is so clear. You know exactly what you want to do and why. You're not walking into your charts this morning going, hey, what's going on? Oh, should I be buying Aussie yen? Fail. That's a failure. If you have a thought process like that, fail. Okay? But if you're like, oh man, I like this consolidation, okay? Or you're like, oh my God, here's the breakout I've been waiting for. Okay, then why were you waiting for that? Well, you think it's going to 90. Why? Who cares why you think that? But if you don't have a strategy, because that's the strategy, right? That's what a strategy is. We're down here, let's call it 85. It's actually 84, but let's just say around, at 85, you think we're going to 90. Okay? Why? Fundamentals, macroeconomics, seasonality, I don't know. You flipped a coin. Great. Strategy done. Okay? So now you use technical analysis. Do you buy markets that look like this? No. So the first part of your technical analysis in a situation like this is you're like, well, I want to buy this, but those technicals tell me not now. Market conditions are not favorable. Okay, how about you want to buy, but the market looks like this? Yeah, you can buy at support, right? You can buy at support down here, or you can wait for it to break out and buy it at support here. What's the congruency? Either way, you're buying at support with the assumption of it heading up. Why would you think that? Because you're a bull. I don't know why, nor does it matter. Okay? And then lastly, how do you trade a market like this? You're buying dips like crazy. Okay? You're buying scenarios like this. Okay? So along the way, this might start trending again, and you're climbing the stairways to profit heaven. I just made that up. That was pretty good. Okay? But many people they lose sight of the simplicity of that. Okay? Or like I showed you, there's like technical strategies. Like when we looked at gold and like, well, someone could be selling it off that pivot, right? Some pivot, right? If you remember. And I'm like, well, if you look 4.5 weeks ago, all you had to do was buy it at the central pivot and you're done. You literally only had to work 1 hour for the entire month. Okay, maybe you worked a day. You worked all of May 1st. It was a tough month. Right? That's the point where people struggle with the easy stuff, but then because they miss all the easy stuff, they want to do all the hard stuff. It's really strange, isn't it? But right? But girl, you know it's true. Okay? Okay? Right? Man, I don't sleep enough. I don't sleep enough. I'm coffeeed out. I can't drink any more coffee. Oh my god. Oh, I need to go outside. What's it like outside? It's nice, isn't it? All right. Yeah. Well, today is Thursday, my favorite day of the week, because we're going to get together in the live group and plan out June. Now, the interesting thing about that is we did that a month ago. Right? We did that a month ago. And one of our challenges 2 weeks ago was, I'm like, well, shit, we've hit all our targets. Now we got to be patient. Right? So I don't know how the last week or so has gone for you guys. I wouldn't expect any amazing results for most people. And that's okay. That's okay by me, because I don't think we had amazing opportunities. There's been some decent trading. I've been focused the last couple of weeks on buying the stock market. Okay. How many people knew that I was going to do that? Anybody? That I expected the stock market to come down in May, and that by the middle of May, I would be buying the stock market, right? So that's what I've been doing. I bought 6 or 7 different companies so far, right? And I'm up on average 10%. It's a pretty good month for the stock market. Yeah. So my money is making me more money. And of course, I'm not paying taxes. It's the whole point of setting that account up. So I'm not paying government taxes on the money. And that money that I'm not paying taxes on has made me more money. Okay. Don't you just love money? I love money. I love money. Money is great because you can grow money, you can compound money, it can be productive. Money creates productivity. Right? A couple of weeks ago, I had 14 workers at my house. Do you know how good I felt? I felt so good. Now, first of all, I look at it and I'm like, I'm helping pay rent. I'm helping put shoes on children's feet. I'm helping with the groceries. I'm putting gas in the tank, right? And every person at the house, whether they were rich or poor or somewhere in between, had dignity and earned my respect. So I transferred wealth. They provided service. And I felt so good to look around, this person hammering this and this person scraping that. It was kind of like the Money Pit, if you've ever seen the movie. Just stuff going on everywhere. Like literally you're walking around, who's in the front yard, who's in the backyard, all this kind of stuff, right? I love it. I love it. I love it. It's wonderful. Money is great. Okay? And part of it, think about it this way. Part of money, so imagine now I have 14 workers. They're providing a product or a service, and I'm giving them income, literally helping put food on the table. Okay? But the interesting thing is the money I gave them came from my other money that made more money. So if I didn't do that, they would not have income from there. So maybe they're like, so I didn't invest, let's say, years ago. So I didn't make the money. So I didn't hire them because I don't own an asset or something. So it would be the assumption here, okay? The assumption here is someone else would have hired them, but you don't know. You don't know what if people didn't do this. There would be no income. If the market was bearish, if the market was tanking, whatever the market, stock market, housing market, job market, whatever, then there would be no income for people. Right? You see? But because I did invest my money or save my money, which is savings is equal to investment. So however you want to use it, right? That money made more money. And with that free money, I gave it to somebody else in exchange for some sort of productivity, and everybody's happy. And ultimately, because it came from free money. Not free like I found it or free somebody gave it to me. The money itself multiplied. Now, yes, I had to invest and move my own personal steady state, but that's what economics is about, right? Isn't that cool? I like money. I love it because it can grow. It works for you like employees, and then you can actually have employees or workers do stuff. And on top of that, maybe then it creates, you give up an asset like cash. The cash turns into somebody's income. But one of the things you might be investing in, the reason you're doing this project, for example, the reason the workers are there, is you're increasing your standard of living. Right? The money multiplier, for sure. For sure. Okay? That's really more of a money supply, right, than anything. But yeah, I get what you're saying, right? It's really a question not of economics, like the money multipliers is how the fractional reserve banking system creates money, right? And for every dollar the Fed spends, you're going to get $10 in increase in money supply. Okay, that's fine. Right, but what we're discussing is more of an issue of finance. Right? An issue of finance. So in year zero, there's 0, 1, 2, 3, 4, 5, 6, 7, let's say. Okay? Okay? In year zero, you start with $10,000. And, okay, it grows at 10% a year. Okay? And in year 2, year 3, year 4, year 5, year 6, year 7, year 8, or year 7, right? You do nothing. Okay? At the end, how much do you have? $100. So that's an issue of finance. That's not economics, right? Okay? Finance is the study of the flow of money. It's a money flow. Okay? Okay? Because in year 2, you have 11K. So on and so forth, but, and by the end you have $100,000. Okay? Caves, that's racist. Oh, did somebody say something racist? Oh, okay. So, right, it's more of, if I give up $10,000 today, I have to give that up for 10% a year that I can't spend. 10% compounded. So I give it up. So in year 8, I have $100,000. That's finance. Okay? But I have to give something up. See, I could just take the 10,000 and buy a car. I could take the 10,000 and go on vacation. Okay? I could take 10,000, buy one airplane ticket. Cool. Or I can give up the consumption. So it's consumption versus savings. Okay? And savings is equal to investment. So, right? Which is interesting. Because if I don't consume it, I can invest it. And if I don't invest it, I save it. But if I save it, the bank's going to invest it. And they're going to earn all the money. They produce the alpha. They keep me liquid, so they leave it in my bank account and pay me, what, 1%? I can buy a bond and earn 2%. But I want to earn 10%, so I'm going to have to buy the S&P 500 or something, right? Well, if I'm buying a bond or if I'm buying an S&P 500 or I'm buying a dividend stock or something, well, that's investment. If I save it, the bank's going to keep me liquid, so I can demand my cash whenever I want, but they're also going to invest it and pay me 1%. Okay? But either way, if I consume it, I convert cash into an asset that has no appreciation and no income. Right? That's consumption. I can save an investment, but if I'm like an investment now has an expected return over time, right? So now it's finance. Now you could say, well, if my expected return is 10% and I'm going to invest for 5 years, how much money will I have at the end of the 5 years? And you'll get a number. Then you're like, wait, but there's other things like inflation, right? Expected inflation. But there's also like opportunity costs. Well, I could just buy the 10-year T-note and earn 2%. So if you adjust for that, I'm only earning 8% plus 2% inflation. So my real return over that period would be 6% per year. Okay? But over 5 years, your 10,000 in 5 years is probably 15,000. So my what I keep talking about is, where did the other 5,000 come from? Okay? So now you can take that 5,000, which wasn't your money. It was, right? Now your money is more money. And now you could take your 5,000, right? Your 5K. And let's say you own a house and you're right. You hire a crew to fix up your house. So it's the crew's income. So now they have jobs and they get paid. Now they take some of that money, though, and they buy material, right? Which means what? Somebody at Home Depot keeps their job. And then the Home Depot has suppliers. But they also, there's a supply chain and everything in there. So now the truckers have jobs, all that kind of stuff. And your generosity comes from the free money that your money made for you. So now the crew has jobs. Home Depot workers have jobs. Delivery truckers have jobs. The lumberjacks that cut down the tree, and the tree goes to the mill workers. Everybody's getting paid now because of your generosity. And what are you doing? You're just moving your new cash and increasing your I. And what happens to I? You increase your potential real productivity. Okay? So now you own an asset, right? Remember, you put money into your house, which you own. Your house was depreciating, so now you've reinvested, created value, and in particular, if your neighbors do the same thing, the value of the asset would actually go up, and now you've made more money. Why did you make more money? Because you took the free money you made, that your money made for you, invested in your asset, and then the asset goes up, and now it's worth $10,000 more. So now you got your $5,000 back again, not liquid, but in the value of your home. Plus you got another $5,000 on top of it. Your money has made more money, has made more money. Okay. Pretty interesting, right? What you should understand is money, and in particular finance, is the study of the flow of money over time. And that you can do calculations. Expected returns from the stock market is like 8% a year, but more under these market conditions, you can expect more. Okay? Levels of inflation, opportunity costs and stuff, right? Because you could say, why would you buy the stock market, make 10% a year when you could buy Dogecoin to make 10,000% a year or lose it all? You're like, well, you might think that's better. Okay, great. But the thing is, it's the time issue that most people want to skip. They want the Lamborghini now. They haven't worked for it. They don't have the capacity mentally, emotionally to create the value, but they just want the Lamborghini. And if they can have the Lambo, then all their problems are going to be solved. Okay? Good-looking people are going to admire them. Rich people are going to hang out with them. They're going to be happy and famous, right? And all this kind of stuff, which of course is retarded, childlike, childlike mind. What people often forget is it's going to take 5, 10, 15, 20 years of hard work. Right? They forget what finance is. The flow of money over time. You will have to give up something today so you can have more in the future if you are able to create value. So the money you give up in year 0, you have to give something up. So risk. Okay? And then what? Your return. What dictates the return? Alpha. So you gave up money, you risked money, and you did something productive with it. Welcome to capitalism. Okay? And I like the way Hong Kong does it. If you have a job, you pay taxes. Okay? The maximum you can pay in Hong Kong is 15%. Okay? So the government takes away your money, lets you keep 85% of it. So now you have 85% of the money, and you decide you're going to invest. You're going to buy your first apartment. Okay? With the money that is already left over. You also have food and other expenses, right? So you probably had to save for years to have the down payment for an apartment. Okay? So you buy it. And you buy a nice one. And it's good. It works out really well. In 10 years, you have 100% return. Okay? You had to give up. You took risk, and you had to sacrifice for years, saving your money. And then finally you get the deal, you take the shot. In Hong Kong, the government says, that was great. Oh my God, what a good deal you did. You bought an apartment and in 10 years it went up in value. Now you're going to flip it, you're going to sell it, and you're going to take your money and maybe buy a better apartment. That is great. What a good idea. In the United States, they're like, oh, what? You made money? You took risk? And you invested, right? You saved and saved and saved and saved, and then you risked it all and invested into an apartment building, and it doubled. F you, where's our 40%? I'm like, what? You already taxed me. You taxed me once when I earned the money. Yeah, well, you made more money now, so we want another 40%. And I don't like that. I don't like that. I don't like that at all. In Hong Kong, they're like, that was good. Good job. Keep it. We don't tax you on that. We don't tax you on that. That was smart. We already taxed you on your income. So you invested your savings and it had a positive outcome. The money was productive and you should keep all the reward. Okay? I like the Hong Kong model. Okay? And in Hong Kong, if you lose all your money because you invested in Dogecoin when it was $2 or whatever, you bought in a million miles late, you had no idea what you were doing, but you decided to take all your money anyways and throw it in because you saw something that you read an article somewhere that Elon Musk was going to blah, 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 blah. You're like, and you throw money at it and you lose. Hong Kong says, good. You should have known. What are you, retarded? You threw money at something that you don't understand? Good. Don't do it again or go broke. Okay? In America, they're going to like, oh my God, the government needs to protect people like that. I'm like, well, maybe not. How many Wall Street bankers are making millions right now, but lost millions of other people's money, millions of dollars of other people's money back in 2008? And they're still around. Well, right? Saying it was going to Israel, really? Woo! Woo! Wee! Oh my God! Oh my God! I think I need to sleep. So, thank you for being on my team. I hope you made a decision on Aussie yen. We talked about it yesterday. It developed an opportunity, so I don't know if you took it or got it or whatever. Pound dollar. Well, I know the pound is strong, and I know the dollar is strong. Dollar strong, pound strong. Why would I look at pound dollar? You see that money run? Doesn't make any sense at the moment. Yeah. Okay. How do I know that? TT wants to know, how do I know this? 20 years of experience, but also seasonality. Okay. It's what I did last year this time too. Last March, I asked people to write down a list of 10 stocks that they've always wanted to buy but could never afford. Okay. And that you should buy it. Okay. Start buying. It was the middle of March, I think, last year. Okay. Then by the middle of April, the Fed indicated that they will never go negative interest rates. And that was enough for me. So I said, sell the dollar for 5 years. Okay. But that's how and how do I get that? That's 20 years of experience, I suppose. Okay. I'm also part of the secret society of supermodels. And we have a finance and investing subcommittee, which I chair. And, supermodels, I don't know. We have some inside information. People think we're stupid, but that's just a game that's a facade we like to play. Okay. Yeah, we here remembers Carnival and MGM. Well, MGM was interesting because I said, do you think Las Vegas will completely go out of business? And nobody said yes. So obviously Vegas was going to return. We didn't know when, and that was part of the issue, but not really. And then we discussed in particular which entities in Las Vegas would have the easiest time refinancing and attracting new capital. Because obviously Vegas was going to be hurt by COVID. So whoever has access, the easiest access, and also defined as cheapest access to capital, would be the winner. And I said, well, MGM has got to be one of those, right? Right? The Hooters casino, maybe not. But MGM, yeah. And I didn't talk about the entertainment side and the movie side, but as you guys know, that just got bought out by Amazon, right? So I'm like, yeah. So, would you buy $100 stock for $6 if you thought the company itself was fine? Sure. Delta only dropped down to like $20, Javier. But my thing back in 2008 was Delta and Bank of America. Okay. So back in 2008, 2009, 2010, I can't tell you the year, but the financial crisis. Let's see. I might have been living in this house at that time. I don't remember. Anyways, one of the trades that I outlined to everybody at FX Boot Camp was Bank of America. And Bank of America was trading at $5. And I said, and this was after a lot of banks got bailed out already. So I said, well, what's the likelihood if Bank of America got to the point where it was insolvent, what's the likelihood the American government would bail out the Bank of America? What's the likelihood? And everybody said 100%. I'm like, yeah, that's what I think too. So therefore, if I buy a $5 stock, am I risking $5? Or when would the government step in? $4? $3? $2? $1? Like, what am I actually risking? Right? That's how I explained it. I have a built-in hedge, essentially. The government was hedging me on that money. So that's how I described it to everybody. And I said to everybody that that's what I was going to do. And then the next day, I'm like, I did it. Right? And at that time, too, Delta Airlines was $5 a share. Bank of America, $5 a share. Okay? Now, unrelated to that, I also owned Apple Computer. And I owned Apple Computer at $6 a share. But I had bought the stock, 20 years earlier. So I held Apple shares. I held it from the 90s, not 95. I probably bought it. I don't know. Actually, I don't know when I bought it. But from the 90s. I bought Apple Computer when it was bankrupt. And I sold my Apple Computer stock when it was the largest company in the world. And so, jokingly, I would recommend you do that. Find a company that's bankrupt, invest into it, and then sell the stock when it's the biggest company in the world. Like, good luck with that. But that's sort of a Dogecoin cryptocurrency kind of play, isn't it? Where I earned tens of thousands of % return on investment. And that was the first stock I ever bought. Okay. The first wine I ever bought to collect became Wine Spectator's magazine wine of the year and became a Napa cult cad. Stuff like that. So I've been lucky a few times, which is pretty cool. Okay. Yeah. All right. anyways, the idea is you got to think forward, guys. You got to think forward. How do you think forward? How about this? Right? I'm late 40s, 50 years old. I don't know. Let's say I'm 50 years old. And I do things like learn blockchain and cryptocurrencies at MIT. Pay thousands of dollars to learn. Right? But I'm behind on Dancing with the Stars. So how do you stay sharp like that? That's what you do. What am I doing? I'm investing and shifting my steady state. See, as a human being, if you get locked into a steady state, you're no longer productive, and you're going to simply depreciate until you're worthless, which means you're dead. So now we can have conversations about IPOs versus ICOs and the burgeoning regulatory environment, and maybe even be a part of the debate on how it's created. Okay? I think pretty interesting. Okay. All right. So I'll see you guys later. If you're in my live group, we will be rehashing what we planned a month ago for next month. So a month ago, we planned 2 or 3 months in advance. So you already know what's going to happen in June. So now we get together, reconfirm, right? Focus on our conviction, focus on our technicals, put some plans together, and a group hug, a song and dance, and we're out of here, right? Wiser. Okay? So I can't wait to see you guys. Is Trader's Way allowing crypto? Well, they only have these cryptos. Well, wait, I have a crypto in here. But, okay, but, yeah, they offer these cryptos. Okay. So I don't know Bitcash. I don't know Bitcash. Ethereum, great. Dash, I don't know Dash. Litecoin, I don't know Litecoin. I don't know what that is. Monero, don't know what that is. Zcash. But like Zcash and Bitcash, I think predate Bitcoin, don't they? So anyways, I don't know why people invest into that, but it's there if you want it, if you need it to feel good, you got it. Cool. So I'll see you guys later today. And if you're not in my live group, fxbootcamp.com if you want to join. And if not, then I will see you guys tomorrow. Have a wonderful day. I'll see you. See you. Bye-bye. Adios.